Hi guys, it's Simon at Kairos Capital Markets. Today I want to show you how I use the Fibonacci retracement to identify the breathing cycle of the marketplace. The advantage of seeing this is when you see a trend change, you would obviously look for a pullback to value to enter once you see the trend change has actually happened. So what I'm going to show on here now, I'm going to show you the weekly chart on Aussie dollar, Japanese yen. It's quite a nice clean chart to show you the Fibonacci retracements, but you can use it on any time frame. Obviously the higher the time frame the better, so if you've got a pullback on the monthly, then that would be quite a nice place to maybe sell or buy depending on what the pullback was created. So what I do is I only use three levels in the Fibonacci retracement. I use the 38.2, the 50 and the 618. So what we did here was this. We noticed we made two highs here and we collapsed down. These two lows here are clearly lower than this one here, so we've had what I'd say is a trend change. So now I'm looking for a pullback for a confirmed trend change. Now I drew this trend line in already, so I would expect it to come to around this area here, and the pullback here was actually, let's take a little look, either 0.5, well 0.5 or slash just under 618. When you draw your Fibonacci retracement, you want to start from the highs to the lows when you're in a downwards trending market, and the pullback is either the 0.5 or the 618 or the 382. What I normally do is try and find the worst case scenario. So some people go, oh look, it's a 618 retracement because of whatever it's going to be, whatever they can think of. And you don't want that. You just want the worst case scenario. Even under the worst case scenario, you can then say every other trader will either see one of the three levels, which makes it rather good. So let's go through this whole entire process of how this downwards trending market actually happened. So we got a 0.5 Fibonacci retracement, and then we actually stalled on the trend line and it dropped down again. So we'll go for the previous highs, which obviously was this one here. So we go from here, the market went to the previous lows down here, and we go across, and again we got a 0.5 rejection with Fibonacci. Again, another point of the breathing cycle of the market. So we're going to do the same thing again, and we've got this high here, we come down to this low, and you can see clearly that there's a 618 pullback. Price come down, then came back up, and it's kind of consolidated around there, and then we hit it low again. So on this one here, it's quite funny. You see, this is where the trend change kind of could happen. We pull back down to here, so we got from this high here down to this low, but look what the price has done. Price has just rallied through, no problem at all, and created what you could say is a double top. It's come up to the next resistance level, and what that says to me is now we could have a possible trend change here. So what we'll do is now we'll pop onto the daily. There we are. And your trend change could be something like this. You could do it from this crazy wick there was, I believe it's from the Brexit that was. But you can do something like this, for example, here. From that low there to this high here. And you could say, I expect the pullback to around this area here somewhere of value. It could obviously pull back down to the 618. It could pull back to anything, any one of these. But we add other confidence factors to it before we take a trade forward. But this is what I'm looking for now. So if it pulls back down and slows around this area here somewhere, that to me would be a confirmed trend change, of which then we'd be looking to go long. To show you another chart, a very recent one, it's the euro dollar, and this is a very, very simple chart. I've drawn a few lines here already. We got 1.5. I have 5.8 here, but you could also say it's 5.5, so it's negligible really in all fairness, but 5.5 and it's still perfectly valid, no problem at all. I've got 1.087, which just kind of is the middle of the zone, and the top of the zone is 1.145. Simple as that. So what we've done is now we've broken out of this zone here, and I'm looking for a pullback. So if you look at the daily chart here, for example, we had here pull back down to there, and you had a perfect 0.5 retracement. This crazy wick here was caused the election day, was it? No, it wasn't the election day. That's something else, obviously. Maybe a rate change or something. Can't remember now. But clearly we had a pullback to 0.5, and then the next one from this high here down to here, we had another 0.3 Fibonacci retracement, 0.382. but it did come up and kiss this zone again, just very, very briefly. Again, that was the election that was, so this is what normally happens, you see. So what we're doing now is the third one is this now. So we're looking to go from, we can do a few things. We can do it from here, like I said, worst case scenario. 382 lines up perfectly with the 1.055 line. So if we pull back to this area, it'd be quite nice. And likewise, if you make it better, well, like I said, people make it better or how they want to draw it, it's a 0.5 retracement. So either way, it's a pullback to value there. And this is what you need to look for to use Fibonacci properly. Pull back to value and add other confidence factors to it. I hope that helps you out a little bit, and I'll speak to you soon.